Hi, this is Randy Finney with Red Side of the Chart, and this is an early session update for Tuesday, November 18th, 2025. It's 10:28 a.m. Eastern Time. So I'm starting the video, so we're about an hour into the trading day, and figured this would be about as good a time as any to get one out. Fired this post off to you as quick as I could. We hit T6, no guarantees, but that was the what I call final near-term target. Now I'm going to align this chart with QQQ. When I added that that T6, I was going for these reaction lows right here. We have this one that occurred in the futures, but you don't see it on QQQ. QQQ is only going to show regular session trades. So again, I aligned it with that, and I want to point out we're a hair shy on QQQ because that was the final target on QQQ, and we very well may get there. This is where during market hours, it's always been my theory, right or wrong, that more traders, and I believe, are trading QQQ and SPY than the futures, which are NQ and ES. So we could hit it. However, here's my logic. I've shared this often. So, we hit my final target, which again aligns with these reaction lows on the futures. And we're a little shy here. So do I want to, again, and I can be wrong, we can smash on through here. I don't think so. I'm going to tell you why and why I reversed, why it was a hard reversal. Do I want to try to milk out another 0.5% and risk that the NQ traders like myself come in and buy this this support level here, and then you get a bounce? Like I said, bounce will be determined. We have just under 2 full trading sessions before we have to worry about NVIDIA. NVIDIA reports tomorrow night after the close. So I think, again, it's just my read on the charts for the time being. I think this is done. Even on the swing accounts, I've closed out the shorts. Up to profits on the VIX longs. Again, not just active trading the swing accounts, just to game a little bounce up, and then we'll, most likely, again, I'll let you know if my plan changes. We could melt down here today. I don't see it happening. I just don't, and that's why I reverse. Again, because NVIDIA is on deck, and I'm going to go over the charts and tell you it's not just a gut feel thing. It's it's a trading plan, number one. That's a final target right there. That should say enough. Final near-term target. Again, this is a 60-minute chart. As I told you, I'm going to be turning my focus to the daily and weekly charts, as I told you I would once we got down here. But now let's take a look at some of the other things out there. So there's, again, QQQ. This is what it looks like on the daily chart. I gave you 2 near-term or intermediate-term swing targets recently on here. I've had the levels there before. And as I said, this is a big level to me. That Friday, that bearish engulfing candle, that big drop there. We caught that, traded that down with impunity. Again, that was also on the NQ. Same chart here. I gave you 2 targets that time. We hit 1, 2, second target, and that was it. I didn't have any additional targets on this time frame. Bounce down, so we did the same thing there. We milked almost every penny of that with impunity. It was a quick, if you blinked, you missed it kind of drop. Here, we milked this whole thing down, but we also had several counter trend bounces, and I highlighted objective levels, bounces to game, and then where to get back in short, including not limited this golden opportunity here. So, we had the 2 best short entries in months on the biggest drop that we've had all year by far, and some just near perfect entries. That was the bearish rising. Well, that was the initial trendline break, divergent high wedge break right there, and then once we had that bounce right here, I give you that setup saying that would be your next sell signal, and took us down here. So nice move, and if you gamed any of the counter trend bounces, you've juiced this biggest drop that we've had in quite some time, and you've more than doubled the total drop, again, depending on how you trade it. So let's get to the other charts and tell you it's not just this. I'll look at a lot of stuff. So again, this is such an important low, a low that I think is going to go. It's just the market's got NVIDIA tomorrow. So yeah, people have soured a little bit because this little tech drop, but NVIDIA is still the most beloved stock in the universe. And so, and it's hanging in there. So let's get to that. I've had some alerts go off today. I'll get to those in a second, but let's go through the market leading stocks. So if you recall, just last week, I colored this up and gave you key levels on the majority of the market leading stocks that need to go before we'll see a big drop. Those are very important support levels. NVIDIA, I gave you 179. Again, all these blue levels were highlighted then last week and a couple times since. So we hit that today. So what do I see? So yes, NVIDIA took out the 50 and it took out the trend line, but that wasn't this is the level that it needs to go. And even if it went today, I wouldn't short NVIDIA or act on it because they're going to report tomorrow after the close. So as I often say, quite often, breakouts, whether they're bullish or bearish, that occur right in front of earnings have a much higher rate of failing. Doesn't mean it couldn't stick. It just means NVIDIA is only going to go so far. And this has already been the pre-earnings sell-off. Let's just talk about that. So from the divergent high, where we peaked, 2 equal candles, NVIDIA has already corrected 16% heading into earnings. And yeah, I have very, very aggressive, much deeper long-term targets that I still maintain and haven't waffled on. I think they'll be hit. I just, before earnings, probably going to see some NVIDIA bulls step in and say, you know what, this little worry about the tech AI hype bubble overvaluation, whatever the media is assigning this cause, it was 100% technicals. Again, let's call a spade here. I think it's going to be hard to argue, that predicting on this breakdown that we'd come to here and going there had nothing to do with technical analysis. It's all about technical analysis. As I said, the media will always retrofit and attach a headline or a cause for any rally, any correction. That's what they do. I've rarely seen them put their hands up in the air and says, we just had the biggest drop in years, or we just had the biggest correction in, all year, and we have no idea why it occurred. They just don't do that. They're just going to assign whatever it is, sentiment, concerns, Trump, whatever they want to put on there. All right, let's just talk facts, guys, and I'll move on and get the video out to you. And 179 has not been taken out yet, so that's important. Apple kissed. I gave you a blue line at 266.78. We fired an alert yesterday, but I checked it. We were still there, so I didn't jump the gun. We hit it again intraday. This is a 60-minute chart. We're still above it. And guys, I think it'll go. This is an official trade. I wouldn't have given you this trade in 3 targets if I didn't think they're going to be hit. And it could break today. And if it does, guess what? I just bought the lows. I'm going to have a stop somewhat below there. I'm going to read the chart. I'm going to watch all of these. I can't tell you exactly where that stop is, but it's not going to be too much below. Like I said, T5, we can go down to T6, whatever the next, that support on QQQ is. I could easily see that. I could see some of these guys buckle. But again, as I've told you, it's collectively, the majority of these guys have to break support. These guys are the big market leading fangs right here, the top components of the S&P 500 and the Nasdaq 100. So far, I just did the 2 biggest ones, NVIDIA and Apple, and they're both not only are above support, they've continued to test and hold key support. Again, it's a support level I think is going to go. I'm trying to pick up nickels in front of a steamroller here. Make no mistake about that. I think these levels are going to go. They could go today. If they do, again, I'll adapt. By the time this video comes out, maybe bing, 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 bing. Like I said, there's a margin bubble and a AI tech bubble. There was a Bitcoin bubble, which appears to have popped. And once the AI bubble pops, that's the knife in the heart of the bull market right there. But it hasn't popped yet. I think it's gonna, but we'll see. Microsoft, I gave it to you on the 60-minute as well. That one's just starting to crack, so there's some concern. But look, we're right now at 490.97. So call that 491 versus my blue line at 492.77. You're talking about less than 2 points on a 500-point security. So that's basis points. So that's basically on the line, right? Again, the rounding error. Basis points is a fraction of 1%. 1 point move on a 100-point security is 1%. So we're talking here 2 points on a 500-point security. So it's a mere fraction of 1%. So for all intents and purposes, Microsoft's there. It warrants watching, because if it gets much below there, then yeah, that one's taken out. But I'm not going to give it a check mark just yet. Again, close enough. May take it out. And again, by the time I'm done with this video, if you get it and you see Microsoft down here, well, you know what? Safe to say that level's been taken out. And that's a multi-month trading range. You can see that line is really, it's contained all the pullback since we got up in that level back in that late June, early July. So it's a big level to me. Again, NVIDIA on deck tomorrow. So even an intraday pop, probably recover and close back on the line today. And then if the fireworks are going to start, they're probably going to start after NVIDIA, whether it's immediate or a week or two. If NVIDIA rallies post earnings, it'll probably be a rally that then gets sold into shortly after. I'd say, again, within days, no more than a couple weeks. That's my guess. And anything else happens, and that's it. And we just regroup. We could book profits on these shorts and get back in on the next one, right? And again, we're not at any risk right now. In fact, we're in a very comfortable level for those of you that took the longer term swing signals, the shorts of the trend line breaks and the recent bearish engulfing candles. All right, Alphabet, I gave you a level of 275 on the 60-minute chart. We're still comfortably above that. So now I've just gone through the top 4 largest components. And Microsoft, like I said, Microsoft, I just addressed it. Technically a hair below, but not a clear violation yet. And again, that can change. And so, if I start getting 4 or 5, 3, 4, 5, 6 check marks, then hey, you know what? I don't want to be long anymore. But right now, like I said, hard reversal, full reversal. Amazon clearly took out that level, and that already happened. And now it's at the next. You can see these are the, again, same levels I gave you before. I'm going to add one more support level for you right here. I just should have had it at these 2 lows, but we're holding this one right now. Again, the same chart I shared in recent videos, 60-minute chart. We took out that level. We've come down here. There's actually a whole confluence of support, just like a lot of the big tech stocks. This is a multi-month trading range. Again, it started back in early July, late June, and Amazon broke out. And the reason I had that level there, that makes it a failed breakout. But we're back into the range, and there's just a whole lot of thick support. Now, again, ultimately, once you break out of a trading range and it proves to be a failed breakout, usually your next stop is the bottom and then down through below. That's from my experience. That's what I expect Amazon to do. It's just a matter of short term. Between now and tomorrow, are they going to come in and buy? You're going to see some dip buyers. It's funny, every time the market makes a new high, we have a couple on the site that come in and criticize all bearish engulfing candles or any short calls. But this is where, if you believe the market's going to new highs, if you didn't want to buy, which you shouldn't have, Amazon here, this is a nice support level. Even better if you get down to the bottom of the zone. Again, I told you which way I think it's going to go, but we'll see. I take it one day at a time. Like I say, support is support until and unless broken. Broadcom, I gave you 325.15, and we're still holding above it, comfortably above it, with positive divergences to boot. Meta, I didn't give you a level. I said it was a sloppy chart. Got positive divergence. You're going to have a short covering rally oversold bounce coming in this one, but it's done. Peaked here. Like everything, like the market, put in a divergent high. It's not as if it didn't pan out. We had that low there. April lows, covered for all those reasons, like the market and everything else that went up, made a new high, made a marginal new and still divergent high. Then it took out this uptrend line. Then it took out its 50 right here. You can see it's just a beautiful display of technical analysis. Took out the 50. Tried for a few days to recover it, couldn't hold it, gapped down and took out in one fell swoop, took out the more important 200s, and it's below those. So any rally now on Meta, it looks like it's top. Any rally back to the 200s, which, it depends if the market's going to rally. It's not going to do this unless QQQ and the rest of these guys rally. If they all start breaking down, they're going to be an additional headwind for Meta because you're going to have selling. Remember, the market works on inflows, outflows. More money coming into SPY, QQQ index funds. They turn around, they spread it among the top names. And when people get scared and they start taking money out of the market, every dollar that comes out of SPY or QQQ goes out proportionally to their weightings in that index out of those stocks. In other words, the ETF and mutual fund companies that get the redemptions must sell what they own. And in the case of index ETFs, they sell them proportionally to their weightings. All right, Tesla, Tesla, like I mentioned, broke down, back tested, but it's been holding on the line. Now it's rejected. So far, like I said, we had a breakdown, parked right on the trend line, parked on it again, down below it right now. Tesla still, the breakdown will, maybe it's going to, this one's probably going to be solidified today unless this market can turn around, rally, and give you another stick save. But we really haven't got back above there. And remember, we're below that level. I told you that's a big level too. 412.57. Like so many big tech stocks, they went in this multi-month trading range. And, this one is broken down, plus the trend line, plus the 50-day. Did I give you, was that the level? Yeah, I guess it was the trend line. Yeah, I gave you on Tesla. Let me make sure. Oh, no. Yeah, there it is. I made it blue on the 60-minute chart. But again, we're kind of slicing and dicing right around through it. So it's still anybody's game. It's early in the trading session. And all right, let's see what happens. So there's the levels. I can sit here and talk for another 20 minutes. And I do watch all the other stuff. XLF, again, financials. Is basically, again, testing that same support level, big triple support, price support around 51.32, and the 200-day simple and exponential moving averages all come in right there. Again, I wish I could see more of the big names like JP Morgan at support. Visa, we hit support today. We hit my fourth target. We're a little down below it now, but again, if they reverse, step in and buy, you'll see this come back up today, and that's my guess. So. There's MasterCard, took out that level. Bank of America holding up on the 50. Wells Fargo holding up on support. So in summary, there's enough market leading stocks, including some of these financials like Wells Fargo here, like XLF, the financial sector ETF, and everything I just showed you at support. I do these videos because I know a day like today, I think most of you want to short, most of you want to buy the VIX, even though that was, the time to buy the VIX was a few weeks back, a lot of, off those divergent lows. And the VIX it's perking up. It's waking up, we're got to take a look at that. We're back to my 25, 27 target. Again, we already hit it once here, parked it on it that day, hit it again, took it out there, went up to the next two targets. We're at it again. And this is the VIX waking up. She wakes up and starts to do these little fits and runs, and then one day, and again, if this is going to happen, and we're going to hit these higher targets, I think it's going to be post NVIDIA, most likely. And NVIDIA, if it's not the immediate catalyst, like I said, give it a day, week. We'll watch the charts, see if they how they develop, and that's it. So near term, if I can get a bounce today and get some dip buyers coming in, some of the nervous shorts squeezed out, taking profits, I'll milk this up probably into tomorrow. And then I want to reload and be short again even on the swing accounts going into NVIDIA earnings. So that's kind of my plan. And like I said, we'll just kind of play it by ear. The same levels that were support and targets on the way down typically will act as your bounce targets and resistance levels. Positive divergence. I mean, look, that could, positive divergence on the 60-minute chart, guys, is usually in a bull market, is usually the catalyst for after a nice correction, to move to new highs. So again, I'm saying this and I'm not being facetious. I'm not trying to be cynical. I know there's a couple of you on the site that are very bullish and almost get mad, when I short the Qs. And so here's your chance. The first 60-minute divergent low in quite a while here on the futures at support. What's not to love about this? If you don't buy now, when do you buy? Do you buy breakouts to new highs? Well, the market has a pattern, and we'll just keep swing trading. If this happens up here, then guess what? A few months from now, I'm going to be highlighting the next bearish rising wedge with 60-minute divergences and divergences on the daily. And I'll swing it down, and it, like this one, will have the potential to be the top, which right now I'm going to treat that as such based on the weekly charts. Again, if you're new to the site, big bearish engulfing candles on the weekly charts of SPY and QQQ. And like I said, they don't always pan out, but quite often they do. This one marked the bear market top there, 26% drop. You can go back in time. We had a bearish engulfing at that top. Mark the that drop down to T3 right there. And so far it's in place. So if you are a longer term swing or trend trader and you shorted based on that or the subsequent trend line break on the weekly, you have your stops. They're going to be commensurate with your price targets. These are the targets I've shared for you. And, you know, if you're only targeting this and pull back to the 200s, you're going to have a tighter stop. If you're shooting for the prize, you can allow yourself a more liberal stop. All right, I'm going to wrap it up here, get the video out to you guys, and that's it. Continue to hunt for trade ideas. I got out some long-term charts on the futures for the main grains, corn, wheat, soybeans. You know, and those are positive today. Like I said, I'm looking for, at all times, trying to keep a diversified portfolio, especially on the longer term accounts, swing accounts, you know, IRAs and things like that. All right, I'm going to wrap it up. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.